Hello and welcome to a somewhat different auction update this week. Kevin Brogan will join me in just a moment. We are going to give you the auction numbers for the coming week, but more importantly, we're going to be talking about just how resilient the market is, and the latest figures from CoreLogic, which Kevin and I will take you through, are reflecting just how resilient it is, because there hasn't been any downturn at this point in time in values. More detail on that and listing numbers as well in just a moment when Kevin Brogan comes back.
Outsourcing will dramatically improve your productivity and profitability. Sure Agents have created a staffing solution to provide great staff who can perform duties in property management, sales, marketing and administration, and at a fraction of the cost, giving you and the team more time to spend on the dollar productive tasks. With rising costs and slowing revenue, the focus must be on value for money. Check it out, sureagents.com.
Welcome back and welcome to Kevin Brogan from CoreLogic. G'day Kevin, how are you doing?
I'm going very well, thanks Kevin.
Yeah, like everyone else in the marketplace, we're just sort of adapting to a new environment. So we're just broadening our auction update show. Certainly we'll give you the auction numbers, but more importantly, I want to take you through with Kevin a great report that's out from CoreLogic. Before we do, let's just bring up the auction numbers for this weekend. The market still continues to recover, Kevin.
Oh, look, there's obviously more activity this week than last, because we had the Anzac Day holiday. Look, I think as you can see, the numbers are still very low compared to last year, as the listings reflect the fact that at the time of listing for the majority of these properties, the impacts of coronavirus were well known.
Yeah. Okay, well, let's move into the report. And the report, we've got a link below this video too to take you through to the full CoreLogic report. So I suggest you have a look at that. Eliza Owen has written it. It's a great report too. It's headed up the relative resilience, yeah, that's a hard word to say, of property values at this point in time. Let's bring up our first graph, because it's showing that, well, firstly, let me ask you this. Is it likely that values are going to fall as a result of what we're going through now, Kevin?
Yeah, look, I think it is inevitable that they will, but of course the question is, how far will they fall? And I think that what this report is showing is that we've seen a clear impact on the market. But a lot of the impact is around deferrals of transaction decisions, and so that means that there's a much more limited impact on property values in the short term, and certainly to date.
Yeah, that graph that we're showing you now, that's the rolling 28 days, I understand, for capital city values. What are we seeing in that, Kevin?
Yeah, so what we're seeing is right up until the first half of March, we were still seeing a continuation of some fairly strong growth in most of the capital city markets. Obviously, in Perth and Darwin, market conditions are weaker, and it was a much sort of lower base. But certainly in Sydney and Melbourne, for example, we're seeing really quite robust growth right the way through until the first half of March. Then what we saw was the steam really taken out of that growth by the coronavirus restrictions and the impact of coronavirus. But although the steam was taken out of the growth trajectory, it hasn't as yet resulted in a reduction in values. And as I say, that's probably because of the deferral of property transaction decisions. And I think we've got some more information in the report about exactly how the mechanics of that work.
Indeed, yeah. As I said, there's a link below to take you to that full report. Have a look at that at the end of the video. The Reserve Bank Governor, Philip Lowe, in an address, sort of predicted that we are in for a bit of a rough patch. Is it reasonable to assume that that's going to happen sooner rather than later, Kevin? And maybe just walk us through that, what he said.
Yeah, so look, I think the projection is that the impact on the economy is going to be really quite profound, and we can certainly see with what's happening at the moment how that impact is going to translate. But at the moment, we're talking about a relatively short time period. So the profound impact is probably going to be over the longer term. And so, I think they're suggesting the national economic output is likely to drop by 10%. Total hours worked is likely to fall by more than 20%. An unemployment rate could reach double figures. Now, those things are perhaps a bit of a slow burn, with people perhaps being furloughed or being forced to take annual or long leave at the moment. So the duration of the impact is going to be really critical in determining how much of an impact there is on the economy.
Yeah, well, that's one thing about the economy. What about housing debt? I understand that it's just hit a new record high, or recently did. What's the impact on that?
Yeah, so the latest figures showed that it had rebounded with that stronger market through the second half of 2019, so that it was actually at just over 142% income to debt ratio in December 2019. And obviously that's something which perhaps exposes a little risk if people's income does drop off, because the average household debt is at quite a high level.
I would have thought, with everything that we've discussed and all the indicators, would mean that we'd already be seeing a high number of distressed properties, but it's almost quite the reverse, with the number of listings probably not at an all-time low, but certainly very, very low, Kevin.
Yeah, look, there've been a number of initiatives, obviously, to maintain both income and credit flows, and certainly a lot of the banks are offering repayment holidays or are negotiating terms rather than taking possession. So look, this is again something that maybe plays into the duration of these issues. If somebody requires a 6-month repayment holiday, and then at the end of that holiday they're able to re-establish their income and payments, then there's no need for a mortgagee in possession situation to arise. But obviously, if it goes on for a lot longer, then you're probably going to start seeing some of those distressed sales.
Yeah, I guess it depends too on vendor expectations, doesn't it, as to when they do come to market, how high their expectations are. I do recall when I first started in real estate in the late 80s, we had a situation, probably not as bad potentially as what we're going to see ahead of us, but certainly a situation where we had to go and tell sellers that the property that they owned, that they wasn't worth what they paid for it originally. And that's a pretty bitter pill to swallow, Kevin.
Oh, look, it certainly is. But I think the expectations part is really important. I mentioned about deferring sale and purchase transactions during a period of uncertainty. A lot of it's got to do with market confidence. So we've seen the market confidence fall. There's no question. But if you look at today's headlines, for example, there are talks of reduced new cases of coronavirus, the possibility of a measured lifting of some restrictions. So a lot of the reduction in market activity is a deferral, and of course the expected duration of that deferral will have an impact on how strongly people return to the market. When, if we can use the term, the market returns to normal, when we actually start seeing some more property transactions, how far down prices have fallen will depend on how long it's taken us to get back to that point.
Yeah, well, it will be interesting to watch, because we will come through this. I mean, there will be a recovery from this. We'll get back to what is going to be the new norm. I don't know what that is, but it'll be interesting to see when these holiday periods are over, and that is that the subsidies are no longer in place, as to what does happen. Have you got a prediction on those lines, Kevin?
Oh, well, look, I think, like many people, I'm sort of looking at the information that's available. There's lots of really encouraging news about how Australia has handled the coronavirus situation pretty well. But of course, there's also talk of a second wave and how vigilant we need to be. So, look, I think what we're going to see is sectors of the economy returning to activity, but probably at a reduced level. And I think we have grounds for cautious optimism. But I think it's really important, obviously, that we don't put ourselves at risk of a second wave, and we make sure that we don't sort of open it up for a complete free-for-all.
Well, we will keep you in touch with what's happening in the market. As I said, we're delighted to be able to broaden our show with Kevin to include a lot of these market stats we're talking about. We'll continue with that, and we'll continue to monitor it. But encourage you to go down below, use that link that'll take you to the CoreLogic report. Kevin, thanks very much for your time. Look forward to catching up with you on Monday when we'll have a look at what the auction results were over the week. Thanks for your time, Kevin.
No problem. Thanks very much, Kevin.